Hello traders, welcome to another crypto market update. In this video, we're going to be talking about the Binance acquisition for roughly $400 million, and then quickly going over more global macro, what the Fed's doing, how crypto will be impacted, and what we could be seeing more long-term in terms of the US dollar, in terms of the economy, in terms of where Bitcoin stands within all of this. We talk about it very often, but yeah, we will discuss it even more because it's a topic that we have a lot of passion for, and will be very interesting to see how it all plays out. First things first, we're going to go over, actually I'm going to bring this whole page over. Binance announces CoinMarketCap acquisition, and CZ, which is the CEO and founder of Binance, gives the scoop. Before we get into this, I just want to say if you do find these videos useful, informative, valuable, it would really be appreciated if you subscribe to our channel and then put on notifications, so then if we do post, you get a notification. And yeah, it would be greatly appreciated, and then we can continue making these videos. So let's go and dive into this article. While the global markets are experiencing tough times amid the coronavirus pandemic, the crypto industry is getting stronger as its core players have tapped one of the biggest crypto mergers in history. Binance, which is the exchange we use, the world's biggest cryptocurrency exchange, has reached an agreement to acquire CoinMarketCap, one of the most referred crypto data websites, in an undisclosed deal. So we don't exactly know how much it was, we just have a rough estimation. The company officially announced the acquisition on Cointelegraph on April 2nd, which is today. So we're bringing you a quick updated news here. This is CZ, the founder. Changpeng Zhao, we just call him CZ, the founder and CEO of Binance, said that Binance and CMC are very similar, as they're both providers of access to crypto and share vision of making crypto assets more accessible and useful for people around the world. So yeah, it's great to see, and we can see that the acquisition will enable us to build on each other's strengths and further grow and instill transparency in the industry. And if you don't know what CoinMarketCap is, it is, let's just see, it's right there. This is that website. I'm sure if you're in the crypto space at all, you've been on this website before. Like the article said, it is the most well-known and probably the most used cryptocurrency data website there is, just in terms of market caps and where they stand for the rankings and all that stuff. And then it gives you some information when you click it. So if you just click on Ethereum, it'll give you information on where to go for the website, announcements, and it gives you some really informative information, historical data tools, looking at different social medias, rankings, on-chain analysis. So there's a lot of information on here, absolutely free to use. They get money from ads and whatnot, but yeah, it's free to use, and it's a great resource. If you don't know the website, I'm sure you do if you follow our page. But yeah, there's a $400 million around merger. The company cannot disclose the amount of the deal as it's protected by a non-disclosure agreement. But yeah, I do think it's a positive thing. Let's continue reading here. While the companies are going to be working closely together, CMC will still continue to operate as an independent business entity. Both Binance and CMC emphasize. So yes, they are going to be within the same ecosystem and same hub, but CMC will be doing their own thing and continue working within their own direction, because obviously CZ and the Binance team stated that they're happy with where they're going. Binance has no bearing on CoinMarketCap rankings. CoinMarketCap stays committed to providing the most accurate, timely, and quality cryptocurrency data in the industry while benefiting from Binance's expertise, resources, and scale. So one thing that we do have to understand about this is Binance actually has Binance Coin BNB, and obviously if they own the ranking system for the globe, they're going to try, well, they're not going to, but they have a possibility of potentially changing the numbers or shifting the data in order to increase the ranking on their coin, BNB. And it's a possibility because they own it. It's just like Jeff Bezos buying Wall Street Journal, and then no one can write anything bad about Amazon or Jeff Bezos because he owns Wall Street Journal, or other news platforms that he basically controls the media in, right? So not exactly relevant, but similar type of situation. If you own a major news resource, you kind of have a tap on the news flow, which is going to impact the psychology of the masses, which will have a psychology on the reputation of Binance or whatever the case may be, right? So it's very important that Binance has completely went ahead and said that they will not try to have any consideration on the CoinMarketCap rankings, even though their coin is within the CoinMarketCap rankings. Let's just read a little bit further here. The CMC acquisition comes about 6 months after industry reports claimed that CoinMarketCap was entirely bootstrapped. So this is what, to me, I found interesting, because this could just be a couple programmers that started CoinMarketCap, and now they just sold it for 400 million. So, you know, completely unrelated, but if you have a dream, if you have a vision, if you just work on it every single day, you might find CZ acquiring you for $400 million one day, is the moral of the story. So yeah, good on them, whoever created CMC. That's phenomenal that they were able to bootstrap it from almost nothing with minimal financial resources. And yeah, they weren't planning on raising any funds anytime soon, and they were just continuing to bootstrap and scale with their own pace. But obviously with Binance's help, they'll be able to exponentially increase their scaling capabilities. So overall, that's a huge acquisition and very well known in the crypto space. The next thing we're going to be going and discussing is the Fed's quantitative easing strategies. So they have been printing a shit ton of money, and what does this mean for crypto and the long-term holds that we are currently holding? If you are a long-term holder, this pertains to you. All right, let's read right into it. This is the quote from Neil, which is this man right here. He is the president of the Federal Reserve Banking in Minneapolis. Let's see what he had to see. There is an infinite amount of cash at the Federal Reserve. I'm sure you've seen that interview where this man literally says, we will come up with the cash. There is an infinite amount of cash available that will be used in these difficult measures, which is basically saying unlimited QE. Let me get some coffee, and then I'll continue working here. All right. So he said, let's see, we will do whatever we need to make sure there is enough cash in the financial system. And right now, there is a lack of cash because the US dollar is in very, very strong demand. If someone's selling gold, oil, silver, any real commodity, the US dollar is the denominated currency, the base currency for almost all these different assets. And when people sell that asset, whatever it is, they need to go into the US dollar first. And that's why you're seeing a surge in the US dollar increase. And we'll talk about inflation a little bit later within this blog. So we can see right here, the US Federal Reserve itself reinforced the message on March 23rd, announcing that it would, quote, continue to purchase Treasury securities and agency mortgage-backed securities in the amounts needed to support smooth market functioning. Support smooth market functioning, aka like literally as much as it needs in order to continue the market operations. The death of capitalism. So yeah, I've been talking about this before this blog. If businesses do not go out of business and they are not rewarded, but they are granted a get out of jail free pass after they've had, mismanaged businesses where you're putting all your capital towards share buybacks so the execs can sell their shares options at a higher price, obviously, and make more money, and not save for a rainy day. If companies are getting bailed out left, right, and center, that's not capitalism. That's not a free market society. And then, is that really a capitalistic society at this point? That is now the question at hand. Maddie Greenspan, I believe the CEO and co-founder of Quantum Economics, told Cointelegraph, the Fed said The Fed said it is willing to buy the entire market, if necessary, to stabilize markets. Meanwhile, on the fiscal side, Congress's $2 trillion stimulus package includes handouts like helicopter money, i.e., as a $1,200 payment to every tax-paying adult who has an annual income below $75,000. Inflation is pretty much a foregone conclusion at this point, he stated elsewhere. But we already talked about inflation, what impacts inflation. It's not just the increase of money supply. We also need to see the velocity of money increase as well. The number of times a single dollar is changed hands. That is going to significantly impact the inflation rates. And we can also actually understand the inflation rates not just in the US, but around the globe, using the consumer price index as well, seeing the percentage increase for the cost of normal goods, a basket worth of goods. You're seeing a percentage increase of that, and you're actually seeing deflation right now, not inflation. Like in Germany, the CPI numbers were actually negative in the most recent CPI numbers, meaning that there is deflation. The prices of assets and goods and services are actually going down, not up. So right now, we've talked about it before in a recession. We've seen it in 08 and 01. Obviously, this is speculation, but there's going to be deflation before big inflation or even hyperinflation, right? So right now, we're still in the deflationary period where all assets or a lot of assets are going down. There's a huge rush to the US dollar, and there will, in my opinion, be a time where, there's going to be investors all around the world going from different assets, equities, bonds even, to cryptos, to gold, silver, and they're all going to, or not everyone, but people are going to sell to the US dollar because it's strong right now. It's what people think is a stable currency. But when and if central banks overreact, there will be a time and place where the investors around the world will lose faith in the US dollar to store wealth because of the mass amount of money printing that will come from the continued stimulus packages that the United States will be implementing. Let's keep reading. Garrick Heilman, I believe that's how we read his name, head of research at blockchain.com, told Cointelegraph the response by central banks for COVID-19 is truly unprecedented, with Fed and Bank of England officials using terms like infinite, unlimited, and radical. They've been using such extraordinary language in hopes they'll prevent equity and credit markets from seizing up. Only time will tell if they have gone too far. This is what I mean. So the central bank is heavily viewing the stock market, the equities market, and yeah, that is taking a massive hit, but that's not the end-all be-all for the economy, right? The stock market is not a direct pulse of how the economy is doing, and it seems like that's the only thing they're caring about at this point in time. So they're just dumping as much money as they can in order to try to solve the problem. But, we've seen it basically help in 2008, and I think that was, rewarding bad behavior in a sense, because in 2008, if you didn't implement QE, it would have gotten worse. The recession would have got worse. But it's a cleanse, right? It's like a drug. It's like a person on drugs. When you are weaning off, let's say, a hard drug and you're addicted to it, it's gonna really be painful because your body's gonna be addicted to it. But over time, you will get worse, and then you'll feel better, and then you'll get off it, and then it's a cleanse, right? But what 2008 did, in my opinion, was you gave it more debt, more QE, and artificially low interest rates, so then more people would borrow and create more debt and create more credit, and that's just inflating the bubble even more. And at this point, they're just not caring at the amount of money they're printing. It's at all costs, we need to do whatever necessary. So I do think that they'll print more because COVID-19 will impact the economy more before it gets better, in my opinion. And then after that, I do think that it's not just going to be an instant switch and let's get right back to the operations of the global economy. I think that it will have a longer duration of pain than what most people think, and it'll turn into a financial crisis because of the banks already getting squeezed. We've already talked about this in great discussion in the different global macro updates. But let's continue reading here. The US dollar is dominant just said that the Civic CEO Vinny Lingham told Cointelegraph the reality is everyone needs to reprice assets and they need to do it in the US dollar. And he's living and grew up in South Africa. I'm living in South Africa. I may have kept money in form of of gold that is priced in rands. Now I'm selling it for local rands and buying the US dollar with those rands. As the rand devalues, the dollar gets stronger. Under such conditions, if the Federal Reserve prints another $2 trillion, it's okay, said Lingham. Greenspan agrees with the US dollar has been the world's most in-demand financial asset in recent weeks. And theoretically, the Fed could print trillions more than it is trillions more than it is currently proposing. And there may not be any hyperinflation. The problem is that no one knows what the quote stop point is, i.e. how much is too much. We don't know hyperinflation is happening until it's too late. So you can't, once the ball is rolling, once you start to see the velocity of money start to increase, the curve start to increase, it's because that's an entire psychological shift of a population, having an entire population start to increase the spending of currency. So in my view, you're not going to see true vast inflation until this whole pandemic ends, this whole somewhat monetary system crash ends, because investors will only go into stores of value when their current store value, i.e. the US dollar, starts to devalue, and we haven't seen that yet. And that's why we look at the DXY, the US dollar index, in order to see the strength of the US dollar. Right? Very important. So BCC is a store of value. We already talked about that. Let's just continue further. The future of crypto. It is still too early to gauge the impact of QE on crypto, said Greenspan. The initial shock of the global economy grinding to a halt is still too fresh. I agree with this quote. The long-term trend is yet to emerge. I completely agree with this. I think BTC will need to see a lot of bullish pressure, at least in the second half of 2020, and 2021 is going to be the big determiner for crypto and BTC to see if it's going to act the way that it's supposed to in terms of the store of value, sort of like a gold 2.0. People have been struggling, and many individuals are selling everything they can, said Lingham. Until there is excess capital, Bitcoin is in the same basket as other assets. There will be no mad rush to get into cryptocurrencies unless the US dollar falters. That's what he said. And I agree to some extent. In the short term, meanwhile, the injection of money tends to float to all markets, and that includes crypto, said Greenspan. Stocks will be first, but the fiscal stimulus is also likely to push the price of BTC. Yes and no. I do think that at some point there will be a time when stocks go even further down, and then Bitcoin will then surge because it's very different from shares of a company, obviously. And I don't think that there will be a correlation over a very long period of time for that. But we will see, because at some point the stimulus will no longer work. You can't print value. You can print currency, which is the US dollar, but you can't print value, right? So at a certain point, it's just the psychology of the masses of saying, yes, this dollar equates to value. But if everyone's all of a sudden just says, wait, they could just print 10 of these dollars, and then now my $10 just became 1/10 of the value. Why am I carrying this? It's completely useless. Why don't I carry something that actually holds value over time? And then they'll look to stable coins, crypto, Bitcoin, gold, silver. I don't exactly know, but every single person is different. I view cryptocurrencies as a version that will triumph against gold and silver, but yeah, every single person is different. So let's read the last little bit here. More decentralized global economy. So this is the positive that we're going to end off the crypto market update, because I do think with all this going on, there is going to be a positive outcome in all of this. There will be a lot of pain and suffering throughout the journey, but the end result will come out and turn into a more positive, more decentralized, more free economy and world. All right, so Zetlin Jones told Cointelegraph that once the recovery begins, a new way has to be found. We will need a more robust economy. One where supply chains are less dependent on a single producer, where workers are less dependent on the operation of a single firm, where individuals are less dependent on a single source of healthcare. I completely agree. I do think that, even with people working from home, people will understand that they can be a little bit more independent and not go to the office every day. Obviously, some jobs require that. But yeah, there are some positives that coming out of this. Last paragraph of the blog post: there are effective movements towards a more decentralized world economy in which blockchain technology seems uniquely poised to play a key role, Zetlin Jones said. They might speed up the demand for blockchain solutions and therefore improve the long-run viability of blockchains and their associated cryptocurrencies. So yeah, ended off on a good note. I completely agree. I do think that, it is very painful, and there's a lot of suffering that is currently taking place, and I do think, unfortunately, it will get worse, but at the end of the day, this does provide, in my opinion, a really good opportunity to try to change what's currently in place, in terms of the economics, in terms of the monetary, fiscal, a lot of stuff that's happening right now that has never been used in history, in terms of the monetary policy, in terms of negative rates, zero rates, QE. That's all brand new. It's just a theory. It's not tested that it'll work over a long period of time. It's actually probably tested that it doesn't work if you just increase the money supply. People look at modern monetary theory, MMT, and think, wow, we've discovered something that's brand new. Look back at history. Look back, thousands of years. Look back at different economies and cultures that have printed money to oblivion. Do you see their currency thriving today? Hell no, of course not. That's just supply and demand. You can think of all the technical terms you want, but in my eyes, it's a pretty easy thing to understand. If you have unlimited supply, how can anything have value? Especially if you're just printing on a piece of paper that you grow from a tree. Just doesn't make sense. All right, so now that we've completed the news kind of fundamental section of the day, we didn't really do any on-chain analysis or anything, but that we don't really have to do every single day. We already know kind of the overarching aspects of the potential miners that are still potentially going to be in capitulation. That's a potential, but we are seeing the price of BTC rise. So if you're a miner and if you're mining, and let's say your cost to mine is, let's say, $6,000 per BTC or whatever the case may be, if the price of BTC is going up, you're not going to sell because you're making money. But once the price of Bitcoin starts going down, you're going to have a high you're going to want to potentially sell because you have operational costs, you have cost of energy, potentially rent, other operational costs that are going to be in USD or a fiat currency. You need to dump crypto or BTC and sell into fiat in order to pay for those operations. And I think just one thing to note before we dive into the charts is the discussion of the BTC halving. And a lot of people are thinking, wow, this is so bullish that the BTC halving is coming up. The number of coins is split in half. But then you got to understand the reward, the block reward that the miners are getting is split in half as well. So, in May, when the BTC halving occurs, instantly, you're going to see the revenue of the miners split in half. That is the reality in the negative side. Yes, the supply is cut in half, and that's great and all in terms of the potential bullishness of a fixed supply asset like BTC or gold. But then on the other hand, you see the reward cut in half, and you have inefficient miners still within the network mining, and once the reward gets cut in half, the revenue of that company gets cut in half as well. So if they're not profitable now, just wait until their revenue gets cut in half. That's going to add to the additional pressure for the inefficient miners within the network. So I just listened to a podcast with Pomp and a guy named Matt Suzuya. Pomp podcast. It was posted a day ago. Podcast 254, and it's really informative. And he's totally on the mining side. And he says there's a lot of still inefficient miners that are using old generation technology, and then there's new gen, and then there's old gen, and a lot of China is using the old gen. They have huge buildings and warehouses for mining, but they're using old gen technology, and then this is causing inefficient miners. And at a certain point, they have to sell all their Bitcoin and go out of business, right? And then when the old, less efficient miners go out of business because newer, more efficient miners are getting them out of business, those old companies will go out of business. They won't get the block rewards, and then those same block rewards will go to the more efficient miners. And what this is going to be creating is a efficient allocation of capital to the most efficient miners. And this is what this cycle is. We've already talked about the mining capitulation cycle. If you haven't, we've made an entire video on that in a previous crypto market update, but this is kind of like a version 2, just going over the fundamentals of it. There will be a time within the reward, or there might be a time within post BTC halving when there's going to be a second miner capitulation, because all the miners within the BTC network will have their revenues cut in half. And if you're like just skimming by, barely able to pay for your operational costs, while BTC is sitting at 68, 69, 6600, somewhere around there, imagine when your revenues get cut in half, and let's say if BTC takes any single little dump whatsoever below the operational cost, like below 64, let's say, you're going to have to sell your Bitcoin in order to pay for the operational costs, and so you're not losing money mining. So whatever you mine and then you sell, you want to make net profit. Fiat costs $100, BTC selling costs $120. You made $20. That's basically what you're trying to do. And if you're selling BTC for 80 and you're making it for 100, well, then you're losing money in operation. It doesn't make sense to continue operation. And then that's total capitulation. You got to do something with it. And then those companies that are less efficient will not get the BTC because it doesn't make sense for them to continue operation. And then those BTC rewards will then get allocated to the miners that are able to continue operation because of their electricity being so low, and they have new generation equipment, the most up-to-date equipment that's able to allow them to most efficiently use energy, which then they'll be able to sustain the network during these times when other miners are going out of business because of the miner capitulation. Their costs are too high, so then basically the capital goes towards the most capital efficient, most efficient companies, and that is true capitalism in my opinion. It's not bailouts, it's not nothing. This is very different from what the US government is doing. If cryptocurrencies was governed by the US government, they'd all get bailed out, and all these companies would be doing share buybacks to boost the private stock or public stock up so then they can make more money. But this is a completely private sector. No one's going to bail these companies out if they go bust, right? And then someone will buy the computing power, the buildings, things will move on. Someone will have the capital. And if it's going to be a service or product that is useful in the world, like mining Bitcoin, someone with capital who's going to be more efficient will start that operation again and will run it more efficiently because they've seen the previous business fail and they're like, oh shit, I don't want that to happen. I just bought this for $5 million or whatever. I don't want to lose that $5 million. I have to be more efficient than the previous person I bought that business from. So you have a shift in business leaders, shift in mindset, understanding that yes, it failed last time, so we have to do better. It's not, oh shit, we didn't do well, we need to get bailed out. Okay, thank God we got bailed out. Okay, let's just be complacent again and go back to what we were doing. It's very easy for people who've already been in this situation to get bailed out and then become complacent. But if you feel the pain of completely going bankrupt, that will hit you a lot harder. And yeah, I completely agree with that. Capitalism is slowly dying in the United States, in my opinion. And businesses should fail because other businesses will take them over, will purchase their assets, and will be able to run a much more efficient business that will be able to provide services in a more efficient manner. So in my opinion, yeah, I do think that it isn't very fair for bailouts for everyone. And mining capitulation could have a second round after the halving, so then we could be looking at another significant dump to the downside. And if you want to know about that podcast with Pomp, who's a very prominent BTC advocate, definitely message me, Keith, and then I'll be able to send you that podcast. But anyways, yeah, that's my view on the longer term, more fundamental on-chain analysis for BTC, and that does line up well with our technicals as well, because May is still a little bit away, so we could have a little last final hurrah push to the upside before the actual capitulation event occurs. And it's just a matter of if we're going to break the lower low or if we're going to hold that low and then hold that large symmetrical triangle. So going to get a little bit of coffee and then we'll dive into the charts. Hopefully you got some information on that. I'm going to get a little bit of coffee and then let's start back up here. All right, so let's dive in. So we're going to go all the way back to the monthly because we started a brand new month. It is April. I didn't make any joke or anything on April 1st. Should have made I 100x'd my account, leveraged, and I lost everything. Jokes. I don't know. I'm not much of a jokester. Not in my cards, but that's okay. Whatever. So let's just quickly talk about what happened and what our view is, and then we'll go over the long-term time frame because I do think it's important to kind of go over what we've seen. Actually, this is a good chart right here. Perfect. So initially, what we were doing is we were looking at this zone right here to short because it was a resistance. It got rejected 1, 2, 3, and then we see a nice descending triangle. Broke to the downside, made a lower low, we entered on the lower high, and then we started to push to the downside. In my opinion, that was a phenomenal trade opportunity, and I'm willing to take that every single time. First major take profit was the previous low right here, where we got stuffed very, very significantly. Now, one thing to note is I've been talking about this for a while. We tried to short twice, right? This was our first short, that was our first entry, and this here was our second entry. So we tried to short twice. We made money here. We took 50% off, but it got stuffed, right? We saw another descending zone right here, and that actually broke to the upside. So that was a first stuff from the buyers. The buyers like, no, you're not going to go all the way down, even though, in my opinion, the ascending wedge like this was really looking like it wanted to push down. The overall structure of the large time frames definitely pointed in a more bearish direction. So the fact that we not only stuffed the first attempt, but we stuffed the second attempt. And they were both good entries that had high probabilities to go to the downside, in my personal opinion, and they both got stuffed. I made good money on the first one. The second one, I reduced risk, but I didn't take any profits. I was looking for the extension to the downside. Reduced risk by like 50%, but still took a loss. And that to me is a key indicator. Like, we should be seeing moves to the downside by now, and we're not. And to me, that could just mean that we're going to get a little spill to the upside. So before, I was viewing the market as a huge ascending zone like here, and then I was looking for shorts because we broke the ascending zone. I'm going to scratch all that. I now am not going to view this market as an ascending zone. I will on the larger time frames, but on the smaller time frames, now I'm viewing it within major support and resistance areas. So the way I'm viewing the market right now is this is a long, nice, well-respected support, and then this is a well-respected resistance. So it went from a descending bearish market into a consolidation sideways market. So in my view, we're now in a sideways market. I'm now just looking to play this consolidation, meaning if it makes a break to the upside, making a higher high, we're looking to enter on the higher low. And because of the stuff multiple times, the first major stuff, second major stuff, I have a bias that we are now going to see a potential move to the upside because of the two stuffs. We should have seen a move to the downside. The sellers had all the opportunity. We had momentum to the downside, breaking support, holding resistance, to me, all the setup was there. It was The bears were handed a meal and said, eat up. And they didn't touch the meal. They're not hungry. They're not eager. So to me, that means that, okay, shit, well, they're either not hungry or the bulls are just so hungry they just push them when we say, I'm fucking starving. I gotta eat. And that's, in my view, kind of what we're seeing right now in the market. So let's now take a step back. We just described what we saw within the recent price action, our two trades that we took. One was a pretty solid trade. The other one, not so much. We took a little bit of took a little small of a loss, but hey, that happens in the markets. Next thing we're going to do is look for another high probability opportunity in the markets, being very patient, looking for those high probability trades, and that is what we're going to be looking for. We're not looking to rush into absolutely anything. We're swing traders. Yeah, we day trade, but we're looking for those high probability situations. Okay, so quick look at the questions here. Truck Nubs said, opinion on long-term holds, continue DCA or wait for the capitulation, said Truck Nubs. This is going on to the fundamental kind of on-chain analysis that we had before breaking down the technicals. I do just want to get into this because as a subscriber of Performante Premium, and this is a pretty important topic and discussion that I think could benefit other people. So this is my opinion, not a fact. And also, it depends on what your risk parameters are for DCA. I personally am going to be waiting. I can't say an infinite amount of conviction, but I have a pretty high conviction that we will see potentially another low. And this isn't a guarantee at all, but for me, what I'm doing with my capital is I'm waiting for the next drop. And then I'll start really heavily dollar cost averaging, and then we'll go over the large time frames as well. But yeah, I do think that we will probably see another drop, and like the time to dollar cost average is soon after a massive drop. So like after the 50%, within this squeeze or this I guess potential head and shoulders, potential reverse head and shoulders or squeeze. Like these are the times that you should be, I think, dollar cost averaging soon after a pretty big drop. But after you see, a series of consolidation, you see a strong push to the upside, you see a consolidation, and then you're seeing these higher highs and higher lows, might not be the best time. And then just looking at another example at the 4-hour chart, looking at the drop from 97 all the way right here, you're seeing like the worst of it. Massive red day, dollar cost averaging in here, probably not a bad bet. Massive down day, and then right around here, probably not a bad bet. So for BTC, you're not going to see too many of these massive bounces like we see sometimes in the stock market. Like in the winter of 2018, the stock market did this, and then in 2019, the stock market did this. And it was like the biggest bounce ever. And we can actually look at it right now. This is a very big segue, but I do want to answer your question, Truck Nub. So this is the long-term time frame, the daily of the S&P. And this is that huge bounce that we had. Huge red day, and then a massive rally all the way back up, right? You don't really see this in crypto that much. When you do see a base form, it's going to hold multiple times, right? Look at here, right? You see a massive bearish move, and then you see a base hold, right? And you see, yes, you get massive dumps, but then you see a base hold right here. You see that second touch again. Yes, you get a recovery, but this isn't a very bearish sentiment move. You're looking for kind of the base to get formed right here. And right now, I'm expecting another base. You see a strong push to the downside and then a pullback right here. Strong push to the downside and a pullback. Even if you're looking, and this is the pullback, you see a slow, gradual move, and then you see the base starting to form again. So in my view, the base has not formed. This is a pullback to a potential next leg to the downside. And I just wanted to explain that before going on to the video. Check Number says, thank you for always wanting to learn more when it comes to DCA. And is still where I have trouble making correct buy placements. Yeah, it's definitely a challenge. DCA is not supposed to be a perfect entry situation, and that's what it's exactly for. Ideally, you're looking for, if you're really truly going dollar cost averaging, it'd just be a bi-weekly placement of $50, $100, $500, whatever it is. I don't really, it's up to you. But yeah, but going a little bit heavier on the massive red days is not a bad option after you see the consolidation. Not on the first leg day down, red leg day down, because they could just have another one. You're wanting to see consolidation on the 4-hour chart, seeing some support hold, right? That's what you're looking for. So anyways, okay, let's continue on with the long-term time frame. I will timestamp this within the recording, so that will be like a chunk of DCA / Q&A, I guess, and then we'll go on to the long-term time frame. And then the previous one will be going over the trades that I took, why they didn't work, what I could learn from them, what they've taught me for, from this point going forward in terms of where the price could be going due to the feedback I'm getting from the trades that have not been working out. It's just a feedback, right? It's all in probabilities. I have no edge over a single one trade, but I have edge over a series of trades because I know how to manage risk and basically trade management, and having a plan is a huge help. So, okay, so let's continue from the monthly. I'm going to get a little bit of coffee here, and then I will continue. I'm going to take a picture of this and then talk about this area right here. All right, so this is the monthly. So this chart represents, for each candle, 1 month worth of data. So this is a very long time frame. We see all the way in 2011, all the way back here. So huge chart, right? Okay, we're not gonna go slow, but we're gonna really discuss each candle here and try to figure this out. In terms of the previous candle we had, obviously that was the biggest red day we've ever had, and it is very distorting what we currently have in our symmetrical triangle, which is our descending zone and our ascending zone. We see the price really pushing down super aggressively, and kind of the only real candle that represents anything close to that is this candle right here. But the only thing is, you have to understand where it is within the price action, right? So this candle right here is around this consolidation, where it's the bottom of the major bearish structure. And then you have a series of higher highs and higher lows, which is kind of the consolidation up to the bull run, right? So this is the low right here. This is the low right here. And then you have a series of higher lows and higher highs like this. And that's going to create the bull run. And then you have the breakout where you can draw it right here or like this. Anyways, you have a descending zone, and that's going to create the breakout, right? So we're still in my opinion, the continuation, the large continuation pattern, holding the low, the higher low, and the higher low, right? So this is the long, large term time frame that we're looking at. But the fact that we pushed all the way down makes me think that this trend line, this support zone, is going to have to be moved somewhere or another, because it hit this zone so far low that we now have a type 3, right? If you don't know the different types, check out the educational content and performance premium. But now we have a type 3. So the fact that we completely didn't respect that zone makes me think that this support is now, I have to move this support potentially. So it's not going to be a super valid zone. It could be like this, and it could be like this. I don't exactly know. So that could be the support that we could be drawing from this low to again this low to again this low. Or we could be going like from here and then like here. And then it could hold at the 5K zone. So at this point in time, we don't exactly know where the support is on the large time frames. But we know, not exactly, but we have a really good placement of the resistance. So on the large time frames, this resistance is going to be the key zone that we're wanting to pass in order to see a significant break and a significant shift in the trend and in the price action, in my opinion. So we got either a massive symmetrical triangle, which is going to be this zone right here. If we hold this low, this higher low, and this higher low like this, we've got a very large symmetrical triangle, which is going to be a very bullish continuation pattern on the monthly. Now, let's say this breaks and we actually get a lower low. And if we crack down below, because right now we got to push to the downside, and now we're getting a series of higher highs and higher lows, and we could draw a trend line. And in my view, I think we could get another dump down, and it's a matter of holding the low or going lower and forming a lower low. So if we're able to hold the previous low, we'll just be holding this zone right here, right? So which wouldn't be a bad thing. We'll come back here, and then we'll continue with the structure of the symmetrical triangle. The question is, if we're going to break the symmetrical triangle, well, then we're probably going to be getting a test of the $3,000 or $3,200 zone. $3K, $3,200 is probably going to be the level where we're going to see if we break this ascending zone, and we're going to test the lows there. So that's the second major zone that we'll see on the monthly. If that's the case, we might see something where we're going to hold. Maybe that's not very well drawn. Something like that, where we're going to get a very long, drawn-out consolidation, or we're going to get a little bump up, and then we're going to see the price move after another hold of the support. We don't exactly know, but I think if we do see this ascending zone break, we're probably going to form some level of a descending zone, but as long as my higher lows hold, that's going to be the structure I'm looking for, right? And that actually is holding pretty well in terms of where we're seeing the global macro, where we're seeing the overall outlook and timeline for BTC. Because in 2020, we said that in 2020, it's still going to be a tough situation, and I'm not really expecting to see a huge bullish push and kind of the bullish bull run start until kind of 2021, because I think there's going to be a lot of carnage before we start to see it. And like we said in the news story, people aren't going to be turning it into Bitcoin until they lose faith in the US dollar. I think that it'll be a long time before the central banks print too much, and then kind of the whole world says, why am I holding this? It's losing value so much. I need to hold something that's able to hold value, and then there'll be a shift. But I think that it'll take a long time before that. But looking, half a year ahead during this whole pandemic is really difficult. So we're going to try to play it, week by week, understanding where the price could go, and that's how we're going to play it. We're not trying to say at exactly January 2021 we're going to hit 100 grander. We're not doing any of that. We're seeing how it is. With so much going on, it's really hard to look long-term projections. So we're trying to, take it as it comes, basically. Try to take the best opportunities as it comes, and let the price action tell the story. We're not trying to predict it. So that's the long-term time frame that we are looking at. Hopefully it gives you a little bit of understanding as to how we view the market. So this is the weekly, exact same structure of the market, except we're now kind of breaking it down even more. So we got an anchor point right here. We have 1 touch, 2 touch, 3 touch. We can even call that rejection zone if you really wanted, but we got 1, 2, 3, and then we get our anchor point. So we got 4 touches. That is very key. That's going to hold our resistance zone. And then we got our anchor point, which is at the around $1,900 zone back in May of 2017. And then that connects the higher low, which is the base of the low of 2019 at 3,200. And then we held that zone very well after the 50% breakdown recently, and then we've rallied back up to form a higher low. So this structure is actually very well respected on the weekly, and this is Coinbase Exchange. If you want to look at it on the weekly, very well respected chart. So what do I see? I'm just going to get a little bit of coffee, and then we'll talk about it right here. All right, so what do we see, and what are we potentially going to see? Well, mid-range, we see this zone of sensitivity really go perfectly in line with the apex of the structure, which is right in the middle. And these symmetrical triangles usually have like some mid-range zone breaking the zone out into 2 sections. You got the short zone, which is kind of here, and then the long zone, which is up here. So for major structural squeezes, I like to use this zone as a no entry zone. So I'm not going to be looking for entries around here too much. Long, basically. So like if it's coming down here, I'm not really looking to short until we see a validation. But basically when you're seeing squeezes, you're looking to long within these zones and short within these zones until you get so close to the apex that the risk reward is not worth it. But right now the risk reward is totally worth it, and we're going to try to use this mid-range zone to our advantage. So right now we're seeing this and we're seeing this. And we still got some space from 68 to where our mid-range zone is. This zone right here is around 7,700-ish. So that's going to be the main resistance zone. And then we got our main support zone, which is around 5K. Right? So that's going to be the structural zone that we currently see. And we're going up to the 7K and we're forming some higher lows. So we're like this. We're going up to the 777, up, and it's just a matter of if we're going to break the zone and come to the downside, or continue and break the $7,700 zone. In my personal view, I do think that we will come back and test this 5K zone, or $51, $52-ish $100 zone, and that's just my personal view. Because we saw a massive dump to the downside, and on those smaller time frames, this is forming a pretty nice ascending zone. We thought that before, but yeah, clearly it is breaking out here to the upside, so we are going to be looking for short-term volatility opportunities to the upside, but our long-term, not macro trend, but our long-term structure supports a potential larger-term move back to the downside, and then it's just a matter of if we're going to hold. We're not going to try to look for a lower low because that's a lower probability opportunity. The highest probability opportunity for the next huge move, in my opinion, is going to be a short from, when we break the ascending zone down to our potential low that's going to hold around 52, 53, or even 5K with a wick down. But that doesn't mean that we could see another move up, and we'll talk about that on the smaller term time frames a little bit later. But hopefully you gathered a lot of information with what we talked about on the weekly, because that's definitely a very important thing that we like to look at. Large term time frames is always something that you want to look at. You don't have to look at it every single day, but it will give you a good understanding of the bias that you should try to be trading in my view. All right, so next thing to look at is the daily chart, and then we'll go over the CME markets here, which is going to be the gaps, just mainly talking about the gaps. So now let's talk about the daily chart. Might look a little bit confusing here with the price action. Hopefully it doesn't. The main thing we're looking at is going to be the funnel that we have here. So we got our anchor point. We got 1 touch, 2 touch, 3 touch, 4 touch, 5 touch. So this support is very, very valid. That's going to be this zone right here. And we got 1, 2, 3. Another resistance. That's right here, which is probably going to be in confluence with our horizontal zone of resistance, which is around 7,700, like we said before, right around here, right? Previous support, new level of resistance, new level of resistance, new level of support, very well respected zone. And if we zoom back, it's a key level of support as well. And then we see it respect that zone before we move down. So we see a zone of confluence for the sellers at around $77-ish $100. Very well respected. So that's going to be our major major resistance zone. That was a previous support. So we're going to go like this. We're going to go like this. And now we got our key level of supply, potentially, right? That is that. And then we see an uptrend, a series of higher lows. We got an anchor point right here. We see 1, 2, 3. And then you see a resistance 1, 2, 3. And we'll zoom right in here. Now that we've discussed the larger time frames, we can discuss what we could see here play out when we zoom right in. So let's get our snip yet again. Oops, that did not snip. There we go. All right, so right now we're holding a resistance. It looks like we are poking our head out of this resistance zone. So let's just delete that. So right now, this is a resistance zone, so we're forming a consolidation right here. These are the lows, these are the highs, and if it breaks out of this consolidation, probably a pretty high likely chance that we're going to test this zone, 78, 77, because it's a resistance zone right here, and it's also a resistance support support, new level of resistance. So I wouldn't be surprised if the price came from around to here, which is obviously a move that's worth potentially trading. I don't exactly know the percentage. We'll get into it a little bit later, but that's still an opportunity here. So yeah, I wouldn't be surprised if that move occurred. But knowing that, we still are looking for shorts. Why is that? Looking at the longer term time frame, right? We see in the daily chart when we zoom in, one, not really respected right there, but we see this zone respected very, very well, and then we see a zone right here. So in my view, we could see a high, and then if we see a little bit of movement, I don't exactly know, but we're going to see something, and if we see a consolidation right around here and fail to make a higher high above 78, I'm going to potentially look for a false breakout, a bull trap, and be looking for shorts if it fails, which means that we could get a move up here, we could get a failure, boom, right? Could possibly be where we're going to get a breakout. A lot of people looking to enter here, and a lot of people are entering because of the very key breakout of the horizontal resistance. And if we get a slam back down, and if we see a break in this zone yet again, definitely looking for shorts. If we see a break in this zone here, level of confluence, that's going to be the key area that we're going to be looking for. So on the daily chart, short term, probably a decent possibility that we could be seeing a move to the upside here. Testing the $7,700 zone, I would not be too surprised, but at the end of the day, our short, looking at a daily, is still in play. Now, I think it's going to be something like this, where we're going to form a high. It's going to be an aggressive breakout, in my opinion, first off, right here, like a huge spike up, and then you're going to see a potentially pullback. Good opportunity to enter here because, you have the range up to this zone here, and then you might see another strike up, and if it forms a lower high, a push up, and then you got to pull back down, and then you form another lower high, you're getting weakening. You're getting weakening bullish pressure, right? And then you're thinking, holy shit, there's a descending triangle on the top here within the consolidation. That's going to be the next big opportunity for us before we fail and tumble to the downside, in my opinion. So yeah, that's my trade right now that I see for the long-term time frame. We can go into the smaller-term time frame, but basically it's very, very simple. I'm waiting for a push clearly above the zone and a pullback, validating the previous resistance as a new level of support. So now that we understand the large-term time frame, we can now zoom into the 4-hour and also the 1-hour chart. All right. And also in this one, it has expanded to about over an hour here. Oops. So I don't know if I'm going to do a lot of the alts. I'll do a quick overview. Brave took all the information out again. I don't really know why, but every single time I've been opening my computer, it's not been saving my charts, so I've been having to restart them, which is a little bit annoying, but that's okay. More charting is never really a bad thing in my personal opinion. So we got a $7,700 zone right around here. We got our 1, 2, 3, 4, 5. Look how well this zone is respected. There's going to be a lot of sell pressure here. We know that for a fact, right? So every single person who is a seller since early or mid-March is now in the red if it goes above this zone. So they're probably going to get out, and that means that there's probably going to be a pretty bullish move, right? But you could enter a long, that's not a problem. If it breaks out, simple stop loss, take profit, good trade plan. But what I'm going to do is I'm going to wait for a validation. So I'm going to look for a bullish push. I want to see on the 1-hour candle closures well above the high, validating that it's a breakout, and I'm looking for a pullback. Basically right at that zone before I make a potential long opportunity. Stop loss, take profit, call it a day, and it's a pretty high probability opportunity in my personal opinion. Now, in that said, let's zoom into the smaller time frames because obviously we could expand on that. One thing to note, I think we can use this as an example. Let's take that. one thing that we could be looking at for a higher confirmation is a squeeze. So let's use this as an example. This is a nice squeeze that we have a horizontal zone, and we broke out, making a higher high. We broke out of it, and we made a higher high, and then we made a even higher high. So at this point, you're thinking, oh shit, I completely missed the train. It was way too high. Now I'm just not able to enter. But look at what happened, right? If you wait, if you have the patience, you form a high, a lower high, you get a squeeze of the price, and then once that squeeze breaks out, you get then another run up to form a high. So that could be what we were looking for. Form a higher high, forming some level of a squeeze and a push up, right? That could be an opportunity here. So we'll see how it plays out. Right now, I'm still holding below our highs here, so I don't want to look to enter just yet. If we see a significant higher high, then I'll be pretty happy. But until that happens, we're not really looking to enter. We see a little bit of a bump up, but still holding this zone. Let's get our horizontal array. Still holding around this zone, so I'm not looking to enter. And even if it does push around this zone, I'm looking for the pullback, like I said before, and that is where we're wanting to enter. And like always, we will discuss with the Performante Premium members of our entry, so they will always be informed. All right. Next thing on our list, quickly just talking about the buyers and sellers in the market. So we do see the buyers are basing, as we can see right here. We had a massive down move, and then we held a base where we held a series of lows that did not make a lower low, and then we started to make an uptrend. Right here, we see the same thing. We're starting to make lows that's not able to make a lower low, basing right here. And then, if we are doing TA on this line chart, oops, you could probably form a nice little zone right here, potential break to the upside. So in my personal view, this also promotes a potential move to the upside, as well as the double top right here. And then it's at the end. So if we see a starting of the dump, that could be a nice double top formation for a reversal back down to the downside, which will then free up a lot of opportunity for some upside potential. So yeah, it's looking like a potential breakout right now. Like I said before, if we do get a bullish push up, a nice little retest, we're looking at a risk of, let's say, 5.5%, 5.6. Let's get it to 5.5. There we go. I'm happy with that. And then the $7,700 zone is around 77, right around there at these highs. So you're looking at a risk reward of 2.28, not phenomenal. You could obviously reduce your risk if you'd like by pushing it up, or you could just wait for the price to break out, come deeper into it, so you could have a higher risk reward situation, so you have a lower risk and a higher reward entry or higher reward potential. At around 7,700. I think I'm just going to leave it right at 77. So I'm just going to go like this. And then go 7,700. Oops. Horizontal line, 7,700. Right around there. So that's going to be the main level of take profit for this trade. So we got to assume that that's going to be the take profit, and we have to understand the risk reward parameters that we're going to get ourselves into. Wherever we enter. So if we're entering here, we have to understand, okay, now if we enter all the way up here, so let's say we enter right now, right? Our risk reward is not looking hot because we have to assume that there's probably going to be some level of a pullback to validate this previous key level of resistance as a new level of support. Looking at the risk reward, if we're entering right now, 1.7. That's a pretty shit risk reward. I don't want to be entering something like this. But let's say, we're coming back all the way down to here. Risk reward of over 3 is looking phenomenal. So if we're able to get, I think at this point, it's looking like a pretty good, solid potential move to the upside. So if we're getting a pullback, it's in my opinion, a decent time to be looking for a potential long here. But we always have to consider the risk reward because in my opinion, I think it's a pretty good, oops, shouldn't have done that. Let's just move that to zeros. And then this can be for the potential short stop loss zone, 6,500. Oops. So let's say if this is the risk reward parameters that we're looking at, 6,500, and then let's get this one at profit at 7,700, 6,500. Perfect. So these are going to be the risk reward parameters. At this point, I'm pretty well accepted that it's a breakout. So now we're just going to look for a good pullback. But we're looking to get the highest probability and best risk reward situation we can. So we're looking at this number right here, the risk reward, right? 2.24 right now. Ideally, 2.5 would be really nice, like above 2.5. So maybe a pullback to the 28.37 would be really good. But we don't want to get too greedy. 2 would kind of be the minimum that I'd be willing to take, basically, at the end of the day. I'm not willing to take anything under 2. So we'll see where it goes. Oh, what'd I do? Holy shit, yeah, that just moved up like real quick. That flashed. But yeah, anyways, we will see what it does. We can see right here, massive move to the upside, and we do inevitably get the pullback. So, that's what we're going to be looking for. Not really going to be trading alts too much because I think BTC is a trade that we're going to be taking here. Let's just see a lot of these other markets here. But overall, we're basically going to be mainly looking at BTC for an entry. Should I go over alts? Yeah, sure. I'm looking at this one though, but I have another monitor. Obviously, I could just stare at. Okay, so that's going to be an opportunity. We'll see where it pulls back to. It's really, really running right now. So obviously, we're not going to be looking to enter. If we don't get on it because it continues to the upside, we're just not going to enter, right? Simple as that. If it's a situation where we have a good opportunity and we think we've missed it, do not enter. That's straight FOMO. Like right now, I'm not sweating. I don't mind. If it pulls back, phenomenal. I get an entry and I'll see what happens. It's in the game of probabilities. If it goes against me, I took a good entry. That's all I can do. And if it continues, it was not in my trade plan to trade the breakout. My trade plan is to trade the pullback, and we've discussed it within our Discord. Let's look right here on the crypto markets right here. This is the trade plan, right? So we're looking for the price to break the key zone, 6,900, looking for the price to completely break the zone, pull back, validate 69.7K, somewhere around there, and then we're looking to buy when it completes that validation. We've been talking about this trade plan for a few days now, ever since we got stuffed. And we are not really going to change it because we're happy with the overall structure of the plan. And if it doesn't come into fruition where we get an entry, that is not a problem. We do not try to chase if we're like, oh shit, I should have traded that breakout instead of waiting. Oh, why didn't I wait? Why didn't I just enter right there instead of waiting for the pullback? Oh, I'm like, it's so easy to beat yourself up trading. So you kind of need to be all right with not doing things with the trade plan. But I told myself that I'm not going to enter until I see a pullback, because it could very, very well easily be a wick on the 4 hour, and I don't want any part of that. So in my personal view, yeah, I'm gonna wait for the entry to give me a favorable risk reward parameter, and then I'll be looking to enter. So yeah, hopefully that gives you a little bit of insight as to why we're not looking to trade at the initial breakout. I used to enter a lot of wick trades, especially within consolidations. I don't love it. I'd rather get a confirmation of a pullback validating the previous resistance as a new level of support, the completion of the exhaustion phase. Right? So that is the completion of the exhaustion is what we're looking for. So, yeah, let's go over some alts. Why not? I don't know if people really look at them, but I do think that they will provide some value. Ethereum's in a very similar structure. We got a nice little squeeze here. Right there. And right there. High of 151. Could go up. A nice little pullback to around 142. Might actually be a possible entry right there. From that squeeze, same thing as BTC. Possible first level of risk or resistance is 158. Second one is 170. That's kind of all I'm going to do for alts here. I'm going to draw this zone right here as green. All right. So that's basically it. I'm going to keep it super simple because my main trade is going to be on BTC. And in these volatile times, to me, it just makes sense to trade the most significant asset within the sector, which in this case is obviously Bitcoin. So yeah, like you got a lot of sympathy plays and stuff if it's a trending market, but right now it is super choppy in the cryptocurrency market, like very, very, very choppy. This is a recent breakout, but we've only just broken the high. We could just come back in. I don't really have enough confidence that it's a trend at all to really, really want to look for some continuation patterns on alts. Very, very choppy, and the more choppy it is, the more I stay away from alts because it's just it's a war zone when it's choppy and you're trading alts. I don't absolutely love doing it. I'd rather just trade Bitcoin when it's in consolidation, and when we do start to see more trending markets, then I'll look for alts. So that's kind of my reason why I'm not looking to enter any alts. But if you are a Performante Premium member and you'd like me to do an analysis on an altcoin, definitely please let me know. I'm very, very happy to do it, not a problem. But in just terms of the stuff I'm going to cover, it's literally no different from my BTC analysis because the trade plan for all these alts are looking so similar on all these market structures. So I'm going to be repeating myself 5 times, and that's kind of why I'm like, okay, is it kind of worth doing it? If you have any questions, let me know. But at the end of the day, we're basically doing the exact same thing as BTC. EOS broke the descending zone. We're now just waiting for a pullback to validate the previous zone. But if we're doing that same trade, why not just trade BTC? To me, that makes sense. Highest liquidity, less spread. Is the biggest asset within the asset class. Just doesn't make sense not to be trading BTC at this point in time. So I will end it there. I really hope you enjoyed it. If you did want a TA done for any of the alts that we're discussing today, just look at yesterday's video or the day before. We go over long-term time frames to smaller term time frames, and there's not much happened other than the little bullish push from the smaller time frames. So yeah, it's very similar to Bitcoin. So if you want a good analysis on the alts, just look at the Bitcoin analysis and play the same structure and the same levels on it, and you basically found what I will be doing. So we really hope you enjoyed today's crypto market update. Yeah, it's looking a little bit more favorable for the short term for the bulls, but I do think that there will be another leg down sooner or later. I think that the BTC halving will provide the minor capitulation needed to get that last leg down. But we will see, right? And that last leg down around 5K. That's kind of what I'm looking at. 52, 5K, somewhere around there. So that's the completion of the crypto market update. Mainly, we're just talking about Bitcoin because obviously that is the god market within the asset class. And it does look like we could be seeing a pullback here. Like I said before, mainly looking at the risk-reward parameters. I will be talking to the Performante Premium members to discuss where my entry point is. And that is basically the completion of the crypto market update. I will be going over all the questions on TikTok and YouTube. But I will end off the recording there that I will be posting on YouTube. So thank you very much for watching. If you found this useful, valuable, informational, actionable, please subscribe. It really helps us out and grows our YouTube channel. And yeah, if you have any questions, drop it in the comments below. And until next time, happy trading.